Hey there, everybody. As you know, I'm a Tesla guy, and I do covered calls on Tesla, and we get reliable income from Tesla, but that doesn't mean that the account always goes up. Sometimes it goes down, and right now we're in that period of time where the account's going down. Why? Because Tesla stock is going down. They just reported numbers an hour ago. I just listened to the almost 2-hour earnings call. I just want to give you the quick highlights, and let me tell you, I'm normally a really big optimist. I kind of knew that this was coming, but I'm going to call it straight. I'm a realist also. This was not great. It was not great. So fourth quarter revenue was $25.17 billion. They were estimating $25.87 billion. To me, that sounds pretty good. And it's up 3% from a year earlier in terms of dollars. Fourth quarter earnings per share was 71 cents. The estimate was 74 cents. So it was down 3 cents from the estimates. And the earnings itself were down 39% from a year ago. So that's not good. You know, when you've got declining earnings in a company, that's not good. The positive is that it's growing its sales. It just reminds me of when Amazon was growing its sales, but they weren't making any money because they just kept taking all their money and plowing it back into R&D, plowing it back into buying those black trucks everywhere and putting in distribution centers. And when they stopped doing all that, everything just went crazy. So I'm hoping it's the same thing going on, but hope is not a strategy in the market. Fourth quarter gross margins is 17.6% versus 18.1%. Not too big of a miss to me, but gross margins are going down because they're lowering prices so they can keep their sales up. That's an issue. Now, if interest rates come down, it should increase their sales and they don't have to, lower the prices anymore. That's the idea. Net income is $7.93 billion and $3.69 billion a year ago. So it's basically doubled practically in net income. So they're making money. So this is a profitable company. That's a big saving grace for me. Fourth quarter sales rose almost 20% from a year ago. 484,000 vehicles sold and delivered in the fourth quarter, up 37% from a year ago, that quarter. That's a significant ramp up in how many deliveries they're getting, and they're doing it profitably. They're not going into debt to finance these things. They're actually growing cash on their balance sheet. Good stuff. They did warn of slowing sales growth. They didn't warn of declining sales. There's a difference. They warned of slowing sales growth. Now, I think Elon Musk has been talking about trying to keep a 50% sales growth pace going. He fell short of that this quarter, and I think it's going to continue to fall short until we get, the Fed to lower rates, which I think is happening this year, and we start to, to see things normalize at Tesla, where we can start going back up the other side, and people can part with their money a bit more and buy some of these cars. Plus, they're coming out next year. Now they're kind of hinting around the announcement of this compact car that's going to be 25,000. So they're going to have a lot of units that they're going to sell, and they're lowering their cost of manufacture. So this is different from any other kind of car company out there because they are able to lower their cost of manufacturing. And when you do that, they're doing some revolutionary things. It's not really a car company. It's more of a company that is innovating in not just cars, but they're innovating in manufacturing. It's almost like a computer company, if you think about it, right? They're lowering the cost by lowering the price of chips. They're just lowering cost of production. And they're not unionized. Well, last quarter, while the unions were, going on strike over at Ford and GM or whoever else was going on strike in Detroit, Tesla was like, yeah, we're going to continue to make cars. And they did. And they made cars while the other companies didn't. And now the other companies that everybody's touting is, oh, these guys are going to kill them. I think there were 2 electric vehicles produced, or at least Humvees, produced by GM the whole last year. And, Tesla's pumping out 484,000 cars a quarter. And, I don't think there's going to be any competition in the EV space from any of the big three anytime soon. But there is a warning of sales growth, and that's something to look at. So we've got declining earnings, declining sales growth, but still making money, still profitable, still growing cash on the balance sheet, still expanding sales. There's a lot of good stuff going on too, but realistically, this was not a good quarter. Now, I look at this like, fortunately, companies trade on forward earnings. And so those earnings right now are not looking good. But if we're looking at this year as a year of cutting rates, spewing election year money into the market, creating asset prices to rise, I think Tesla's going to benefit from that. Stock markets usually trade about 12 to 18 months before the actual events happen. So they're trading on those things that are going to happen in the future. So if you think Tesla is going to be doing good things in the future, growing their car sales, which I do, growing their earnings, which I still do, growing full self-driving and all these other things that I'm going to tell you about in a second, then the trajectory is up. And while you wait, you make reliable income like we do in the cash flow machine by selling covered call options against it. Now, I just want to touch on these things because everybody looks at Tesla like a car company, and it is, but it's also more than a car company. It had the best-selling car model, the Model Y, in America last year, right? So they're not just a little upstart electric vehicle company. They also got contracts with some of the big car companies to do chargers. So the other companies are now coming to them to adopt their charger technology. That's going to accrete to them once that becomes a big enough line item. But listen to the other revenue streams that Tesla has. The Cybertruck. They're going to be making 250,000 Cybertrucks every year. That's that stainless steel looking DeLorean pickup truck that looks, to me, it looks really cool. At first I was like, well, that's weird. It's a little utopian, but it actually looks pretty cool, and it's very effective in the way they produce it. They produce it using a Unistamp, which is not a bunch of pieces put together. It's like one piece molded and a few pieces. So it's a lot more efficient processing. So the Cybertruck is going to be a big deal, and there's still 2 million on back order. I'm one of those 2 million to order a Cybertruck. They're coming out, like I mentioned, with a new car, the under $25,000 model, which they should start producing in 2025. They have semi-trucks, which we're not hearing much about, but I know Pepsi-Cola took delivery for their short-run deliveries in California, and I think those are going well from what I'm hearing, but they're not. I haven't heard much about the ramp up of the semi, so I got to get back in on that and figure out what's going on with the semi. The energy business is the quiet part of the business because it's not sexy. It's solar panels and batteries, and that part of the business is growing really well. They're full self-driving, which everybody's been like waiting for years. And Elon Musk said, oh, this is going to be out in 2022 or 2020. I never believed any of that. But he's always, and he admitted it today on the call, he's always very optimistic when it comes to his time horizons. But it's coming. I sat in a car, a few months ago with a friend of mine who has a Tesla, and he's a big Tesla guy, and the car drove itself. And it's getting even better. They're saying, oh, it'll never happen. I'm like, this car's got like all these cameras around it, and it's happening. It stopped when there was a pedestrian. It stopped when there was a car coming that ran the light. It knows what's going on, and it's got millions and millions, going to be billions soon, of miles of camera data that it's taking in from all these cameras, and it's the best-selling model. So that's all going into the AI, which is a big part of Tesla. I think it's going to be the biggest AI company, or at least the top 3 in the next year or two. So it's got the semi-truck. We've got the energy business, full self-driving. And I think, when you tack on full self-driving at $12,000 to $15,000, or even on a monthly basis, that's another revenue stream for Tesla. Not everybody's going to want the full self-driving because they're going to want to drive, but it's kind of cool to sit back and go like this and, kind of monitor the car, because you're not supposed to just let it drive itself. You kind of got to monitor it. But some of these drives, for a half hour, 45 minutes, you don't have to touch the wheel or the pedals. All right, robo-taxis. If full self-driving is going to work, they're talking about taking this $25,000 compact car and getting rid of the pedals and the steering wheel and everything, and you're just going to get in it, and it's going to take you wherever according to the GPS or wherever you tell it. Pretty cool. That robo-taxi business is a big part of what they're going to be doing in the future. It's not here yet. The Optimus, which nobody's talking about, is their new robot, and this robot is going to, first of all, take the place of humans in some of their manufacturing facilities, and then it's going to take the place of some of the stuff that you're doing at home. It's going to do your laundry. It's going to cook your meals. I've seen some of the demos already. It's freaky. Like, these are almost human-looking things, and they're cool. They do all kinds of stuff, and it's going to make our lives easier, kind of like AI is making lives easier, kind of like the computer made our lives easier, or your phone. Like, this is technology that's coming, and the last one feeds into this, and it's artificial intelligence. I mentioned that before. So Tesla's doing a lot of things besides building cars, but everybody focuses on cars because it's like 80% of their business, and rightly so, and I get it. But Tesla is a company that's doing big, big things. I still believe, and Kathy Wood from ARK Invest agrees, not she agrees with me, but I kind of agree with her, I guess. She's a little bigger than me. But we kind of agree that this is a company to be reckoned with, probably going to be one of the most valuable, if not the most valuable company in the future. And so to me, I buy the stock, for better or for worse. I'm kind of married to this stock because I believe in the story, as you can tell. I didn't like the quarter, but I kind of knew this quarter was coming. I just didn't think it was going to be as bad as it was. But I think, sometimes you got to get these bad quarters out of the way in order to make way for good quarters. We'll see. But the stock is at the same price. It's actually at a lesser price now than it was 3 years ago, and it's producing 4 times the amount of cars. At some point, that has to accrue to a higher stock price, especially because they're not doing it unprofitably. They're still making 17% in margins. So that's my thesis on Tesla. I'm going to pop a couple more screenshots up here of graphs so that you can see all the graphs are moving in the right direction. And you can look at Tesla compared to Ford and GM, and Tesla's got an upward trajectory going on, and these other 2 companies just don't. Now, do I think it's an either or? No, it's just like, I don't think anything's an either or in life, right? I think we need all of it. We need solar power, we need wind, we need gas, we need oil, we need coal, we need it all. We can't just get rid of it all. Like, there's nothing that's gonna solve the problem, right? Coal has its problems, solar has its problems, wind definitely has its problems. Like, nothing's gonna solve it. When you put them all together, you got a pretty good mix. The same thing with Tesla. Like, it's not gonna solve all the problems, but when you put all the revenue streams together, it's a pretty good mix. That's my thesis on Tesla. Mixed report for the quarter, kind of a negative report actually, but to me, it doesn't change anything for me because I buy the stock and I sell calls against it, and I create 2 to 3% income a week basically on the calls, and I'm happy making that while I wait for the stock to finally go back up.
Hi, Mark Yagi here, wealth architect and author of this book on my covered call investing system called the Cash Flow Machine. Listen, what you just saw is just one part of creating reliable income of 2 to 4% a month from the stock market. But if it were that easy, then everyone would do it, right? If you want to learn how I create investment income the right way, then you need to learn and have a system with rules and what-if strategies so that you can learn what I do when the market goes against me, what I do when the stock goes against me, how to adjust my trade so that it's always in a winning position, how much to risk, how to build a multi-million-dollar portfolio that creates income of $10,000, $20,000, or $30,000 a month in semi-passive income. And best of all, the whole cash flow machine system takes less than an hour a week to implement. Just go to cashflowmachine.io to learn more, or click this link for more videos, masterclasses, and free resources. See you there.